Well, hello, hello, hello. Happy New Year. Happy Monday, friends. Good to be back with you. Hope you all got some good rest and hopefully got the chance to turn off the phone over the holidays and be with your loved ones. And we're all coming back in here fresh and ready to get after 2025. So let's dive in, shall we? I've got some special things to share with you today, specifically with my forecast about what's going to happen with these rates this year. It's always a gutsy move, but hey, I'm down for it. You ready? Here we go. All right, so last we left our heroes, the bond market was kind of in a free fall, wasn't it? And rates were continuing to climb up, and there was no kind of floor that caught this thing. Well, I'm happy to report over the last week or so, we've got a floor of support here, right around that 100.17 that's serving as a floor of support. At the same time, we do have a pretty tough ceiling here that we haven't been able to break through. We can see, though, from the trend meter, if you will, the statistics, we can see that the bonds are severely oversold at this point. So hopefully that means bond buyers will be coming back in. But wait, there's lots of stuff on deck this week that could affect that. I'm going to talk to you about that in just 2 seconds. What's going on with rates, you ask? When we left off last week for the holidays, or the 2 weeks ago for the holidays, 6.95. Today we're sitting at 7.10. Remember, folks, national averages as aggregated by our good friends over at Mortgage News Daily, based on average credit scores, et cetera, et cetera. You'll also be different, so you definitely want to give a call to your favorite loan officer and have that conversation about what specifically your rates would be and could be. Okay, speaking of rates, what are we going to go next year, Omeed? Good question. 2025. The year-end forecast so far from Realtor.com, NAR, that's National Association of Realtors, Zillow, and MBS Highway, which is the folks that bring us a lot of the data that we share and kind of dissect with you here. Realtor.com says it's going to be 6.2%. NAR says it's going to be near 6%. Zillow apparently doesn't have an opinion, and the MBS Highway folks say it's going to be at 5.75. Now, existing home sales, they're saying it's going to go up 1.5%. NAR says 10% higher. That is kind of a mind blower there. 7% and 12%. And then year over year, pricing increases anywhere from 2% to 4%. Now, remember, this is a national averages of real estate. There is no such thing as a national real estate market. It will always boil down to the pockets. But here's the thing. I think these folks are off their rockers. I don't think we're going to see what it is that we're going to see, and I'll explain to you super quick why. All right, my prediction. Rates are going to be somewhere between 6.5% and 7%. I'm leaning more towards kind of the 6.75%, 6 7/8. Why? I'm not going to read this slide to you. Pause it here. It's good information. Look through it, but there's a ton of debt. And when we are in debt, that causes inflationary issues. And unless and until the government comes by and does a quantitative easing, which I don't think they're going to do, we're going to see higher inflation and higher rates. Additionally, if Trump's administration actually puts these tariffs into place, especially with Canada, especially with Mexico, we get 61% of our lumber to build our houses from Canada. Now we're going to have that cost 25% more. 66% of all the fruit and vegetables that comes into America comes from Mexico. What are we going to have? $9 avocados? So this is something that's out there. So I won't completely know about this stuff until about Q1, but let's just wait and see what happens. Okay. Where we're going to get to, and as Torah always says, land the plane. I'm landing the plane here. If we had a debt that was 14.5 trillion in 2020, and right now it's almost 18 trillion in 2024, right? This represents a lot of money and debt that was added to our structure. Also, our delinquencies in paying this debt is up as the highest that it's been quarter over quarter. But here's the thing. Look at the unemployment report. In 2020, unemployment for the year was at 8.1. In 2021, 5.3. 2022, 3.6. 2023, 3.6. But now we're at 4.2. So if folks are lower on the unemployment ranges, but still not paying their bills, what is that telling us? That is telling us that people are living off of borrowed money, which is, as you guessed it, inflationary. Now, what's happening this week? JOLTS report, which measures job opening and labor turnover statistics, that comes out on Tuesday. Very important. The Federal Reserve minutes comes out. We're going to pick through those and see what they said. ADP, which is the company that manages our payrolls, 250 million payrolls, they're going to tell us if jobs were added or jobs are subtracted. The initial jobless claims, the first unemployment report of the year, is going to be there. And then last but not least, the BLS jobs report, which is going to be an interesting one for me because we are basically getting ready to exit from one administration and go to another. So it'll be interesting to see what it is that ad says. Be sure you guys are following us on our Instagram page. You're going to see stuff like this there. Omeed S, super simple on Instagram. Once a day, we're going to post rates, and throughout the day, we're going to post updates 30, 60, 90 seconds. So you're in the know about what's happening. If you're a real estate professional, you need to be subscribed to this so you can be in the know. Speaking of, if you're a real estate professional, I've been asked by the Washington Mortgage Bankers Association so kindly to join these other talented folks, Taryn and Carice here, to do a workshop regarding reinventing yourself and staying relevant in this ever-changing business. If you are a realtor, a loan officer, a builder, this would be something that is important to you from some folks that have done the job already and are sharing their knowledge with you. I would love to see you guys out there. It's January 21st, starts at 4:30 down in Seattle. You can find the details by visiting wa-mba.org, sponsored by our good friends at Arch and Sharon Knowles, who's always been a great contributor and a great friend to all of us. Okay, so with that, please do subscribe, like, and comment. Share this with somebody that you love, and have a fantastic week. As always, we're right here for you, so let us know how we can help, okay? Cheers and happy 2025. Let's go get it.